Minutes past 8 o'clock. It's time for our table talk this morning. I've got with me Nate Johnson from Risk Managers Insurance. And good morning. Welcome.
Hey, good morning, Jason. I appreciate you having me.
Good to have you along. It's a snowy morning. Hopefully the drive over wasn't too bad.
Yeah, no, roads are really clear. And you know what? We need the moisture. We'll take the water anytime we can get it.
Absolutely. All right, so we'll go ahead and jump in. Just a quick recap of last month.
Yeah, so last month we kind of focused on what's called accidental health insurance. And it's a little insurance policy that gets picked up. It's like an indemnity, like an AFLAC in a sense. So if you're hurt due to an accident, right, sports injury, whatever it is, then that policy would give you back a specific amount of money depending on how much you picked.
Okay.
And I used an example of my boy breaking his knee and having a knee surgery, and we ended up getting about $5,000 back from that, and covered a lot of the deductible costs. Absolutely.
Yeah, my son broke his arm a couple of months ago.
Yep.
Would have been nice.
Yeah. I mean, it was his surgery ended up costing about $22,000, total.
Yeah.
After the health insurance picked up, we still owed about $6,000, and so this picked up almost
Covered
everything
most
up
of
to
that.
the deductible. So
Nice.
it was really, really nice to have. Yeah.
God love that. So, all right. So why is auto insurance so important?
Yeah. We decided this time of year it's good to jump into the auto coverage. Really the main reason we have auto insurance is it's our responsibility to put you back to whole if I cause an accident, right?
Yeah.
I can either do that through an insurance policy, or I can do that through my own personal pocket. And the state mandates, if we're on the road, that we have to have an insurance policy. So that's really why it's important, is to be able to put you back to whole if I put you in a financial bind.
Yeah, that makes sense. So what is a major misconception about what happens with auto liability?
Yeah. So the major misconception is if I just go buy a policy, I'm covered, right? For liability reasons. The misconception is that the state mandate, the minimum that they require is $25,000 for medical, and this is medical to those that I hurt.
Yeah,
right?
okay.
And only $15,000 for the property damage that I caused.
That probably wouldn't cover a lot of things.
Absolutely, and that's the big misconception is, I have insurance, I'm completely covered. Well, in reality, you're only covered up to that limit.
How many vehicles sell for under 15,000 these days?
Very few.
Very
My
few.
daughter's 2002 Toyota Camry.
Yeah, exactly.
That's about it.
Looking at 20-year-old vehicles there, anything newer than that, it's going to be a heck of a lot more. Not to mention the medical bills, $25,000.
Yeah,
Serious accident.
It really is not enough, to be honest, these days. And like I said, my boy, just even having a little knee surgery, $22,000. If that was in an auto accident, you've pretty much maxed out the medical. And then if that would have gone above and beyond, then
it's out of your pocket.
It's out of your pocket.
Oof. All right, so can you give us an example of an auto claim that's had this type of effect?
Yeah. A prime example of one, and I won't use their names or their companies or anything like that. So what I'll do is I'll use my name and Tanner's name as the example. Okay. So let's say I'm driving down the street and I run a yield sign, and Tanner is coming the other direction on a through street, and I run the yield sign and hit Tanner. Okay, so it's my fault. Prime example of that is Tanner's vehicle was worth about $34,000.
Okay.
His insurance policy only paid up to $25,000, which is what we kind of talked about in the last question. And so now what happens is I'm still responsible for the difference. And two things could happen. Tanner could come after me civilly for that $9,000 difference. Or in this case, what Tanner did is he went to his insurance company. Luckily, he had the physical damage to cover his. They're going to total the vehicle and give him the money, and then his insurance company is going to come back after me. So it's still going to end up coming back to me from a civil suit. Whether we can settle it out of court, that's another matter. But in reality, I'm still responsible to put Tanner back to whole, right? Then there was no medical, but it was strictly the property damage. And the sad reality is to increase that coverage from $25,000 to $100,000 is literally $15 to $20 per vehicle per month. It's very inexpensive when you start thinking of the ramifications of how that works.
Much rather pay an extra $20 a month than tens of thousands of dollars.
Absolutely. Yeah.
Wow. All right. So how do you calculate how much car insurance to purchase then?
Yeah, so the couple major factors that I use is one is how much do I have to lose, right? Do I have multiple homes? Do I have multiple vehicles? I mean, any of those assets can be taken from me to pay for a lawsuit, because that's really what it is I called Tanner harm, and now I'm pulled into a civil lawsuit. He wants to be paid back. And if that means I have to sell my home or sell vehicles to come up with that money, I'm responsible to do that. And so the first question is how much do I have to lose, right? And I would adjust that policy accordingly so that I don't lose my home in the case of a major lawsuit. You know, and then the other thing that I look at is what are the average costs of vehicles and medical bills right now?
High.
You know, they're high. And so really, 25,000, 50,000, in my personal opinion, seeing what we see on a daily basis is not enough.
Yeah.
You know, the sad reality is insurance, no matter which carrier you're with, the rates are going up.
Yeah.
But the little bit of money you spend on the policy is a whole lot less than any kind of money's paid out on the back pocket.
Yeah, no kidding.
And so I always recommend, you know, look at those limits. If you have a state minimum policy, 25,000, just see what it would cost to increase that to 100 or 250,000. You might be surprised at how minimal the front pocket expense is.
Yeah.
And I would just recommend that you ask your agent, whoever that is, whether it's, you know, the Levitt Group or Farm Bureau or American Family or whoever it is, just talk to them about it and say, hey, how much will this really cost? Because I don't want to lose my home on sliding through a yield sign. I didn't intend to, but I did anyways, and it's still my fault.
Yeah, with slick roads?
Yep.
Oh, things can happen.
Yep.
Absolutely. Oh, now I'm going to have to go look at my policy.
Yeah, it's worth looking at.
Oh, absolutely. All right, so if folks have any questions.
Mm-hmm. Yeah, you can always reach us. You know, our phone number, we've got 2 locations, one here in Ephraim and one in Taylorsville. The best way is just go onto our website, riskman1.com, and you can pull all our contact emails. We have agents that speak Spanish, so we do try to accommodate for everybody. And yeah, just reach out and look for us. And if we can't handle it, we know some references of who to send you to.
All right, fantastic. Anything else?